Welcome back, investors, to Ticker Time News. I'm Adam, and here's the latest segment from the After Hours show. Toro Company, ticker symbol TTC, made the cut after the company reported decent Q4 earnings results. The manufacturer of equipment for lawn mowing, landscaping, snow removal, and other agricultural utilities has endured supply chain challenges, along with most of the other industrials in the sector throughout the year, but has still managed to post double-digit growth each quarter in fiscal year 21. Toro also laid out a bullish long-term target in Q4, a testament to the robust underlying demand in both its rural segment and its professional segment. In Q4, Toro posted modest earnings. Their upside was just 3 cents per share, translating to a decent 12.5% year-over-year gain. However, revenues continued to show strength, growing 14.2% year-over-year to $960.7 million for Toro's fifth consecutive quarter of double-digit growth. Sales were solid in both of Toro's segments, but residential continued to be the shining star, jumping 19.8% year over year in Q4, an excellent continuation of momentum from the 23% jump in Q3. Although residential has now been the standout in 3 of the past 4 quarters, it typically only makes up about a fourth of total sales. For that reason, Toro depends heavily on steady growth in its professional segment. And since it was a laggard to residential, it still proved to be no slouch. In Q4, professional sales rose 13.7% year over year, making the third straight quarter of double-digit growth. Despite that solid sales growth, Toro's year-over-year adjusted EPS decline was a sharp reversal from the 4 straight quarters of growth. It shows the increasing magnitude of inflationary headwinds Toro is facing. For example, both segments experienced earnings decline year over year, with residential seeing a massive 55.1% tumble in Q4. Although productivity improved, higher material and freight costs crushed any positive impact productivity had in the quarter, leading gross margins to decline by 560 basis points year over year. Nevertheless, Toro doesn't expect the macroeconomic challenges to last over the long term, as indicated by the company's upside fiscal year 22 earnings and revenue guidance. Toro's expected adjusted EPS of $3.90 to $4.10, about an 8% year-over-year growth on the low end of that, and revenue growth of about 8 to 10% year-over-year, perhaps even more indicative of lasting demand. Toro forecasted ending fiscal year 24 with over $5 billion in annual organic net sales, translating into about an 8% compound annual growth rate, a nice jump up from its typical low single-digit organic growth rate from fiscal year 21. The main takeaway from Q4 is that demand remained robust as customers continued focusing more on outdoor environments. Also, in tandem with a boom in housing market demand that took shape over the last year and a half, Toro's residential segment has continued to be a standout. One final note: I like seeing Toro provide bullish long-term organic sales targets, as it shows that the company is optimistic about current demand levels, and they're not just a one-off. As a shift from city centers to suburban housing continues, while supply chains begin improving, look for Toro to be a strong beneficiary going forward. What do you think about eToro? Is a company that makes lawn equipment and snow blowers and plows a company you could see in your portfolio? Or do you think that, well, there's others to choose from, right? We've got John Deere, that's the biggest. Let me know in the comments what you think. Happy holidays! Get 5 free stocks from Webull. All you need to do is click the link in the description, tickertimenews.com/Webull, sign up for an account, and deposit any amount. $5, $10, it doesn't matter. Any amount, and get 5 free stocks. Folks, that is free money during the holidays, and it's super simple to do. So click the link, tickertimenews.com/Webull, and get your 5 free stocks today. Have a wonderful holiday season, folks, and I will see you in the next video.